The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray, feeling good, Lewis. We're going to start out here like we usually do with the German DAX, and there's a couple questions related to this chart. As you can see, we did complete the patterns down there. We've had a nice bounce back, and the question that's been posed is, how do we know what the next rally is going to be? Boys and girls, let me explain something to you clearly and once and for all. A, you never know where the market is going for sure. Let's repeat that. You never know where the market is going for sure, period. That'll never happen. It's all based on probabilities. What Alan has done here is he showed the different types of possible scenarios for the market to rally in the DAX. Now, he doesn't know which one of those is going to happen, if any of them are going to happen. What he's doing is he's trying to be patient to wait to see that if the correction comes like he's expecting, he will check the Fibonacci numbers at that time and do some other work that he does, which is related to time cycles. How long did it take the last rally to get to where it is? To try to find some similarities of what happened in the past, because what happens in the past gives you a pretty good idea, you know, what happens in the future. Just like in the Bible, as above, so below. What happened once before will happen again. I don't know what the exact terminology is that is, but I know there's several references of that. Anyway, that's what he's looking at here. We did get a pretty good bounce. Now, one second. You remember when we started this week, I was saying that when I did the newsletter this week, I just couldn't believe how many Fibonacci numbers had been hit on Thursday and Friday of last week. I mean, it was just amazing. I think there were 11 different factors that said the market was going to rally. And then, of course, when you looked at the volatility index and the fact that it could hardly rally at all, it got up to like 26 or 27, you know, with the, you know, stocks down, you know, well over 800 points on one day. It was, you know, it was really telling you that there was a lot more buying in there that looked like it was going to happen. And of course, yesterday we had a pretty good rally, just a normal rally. That's all it really is. But one of the things that we talked about on Monday when we showed these FANG stocks, that the most bullish of all the FANG stocks, of course, was Netflix. And the reason why is it couldn't even take out the lows from July. I mean, that was a really nice 61% retracement, whereas all the other stocks made perfect ABCD corrections, but you couldn't actually, you know, get anything done with Netflix. And look what happened. You know, it was up $45 overnight. It got up to 383 at one time. We're trading at around 379, somewhere in that ballpark right now. And we'll see what okay, boys and girls, enough. Got too many comedians in the room here. Yes, Terry, I heard about your great-great-great-grandfather having high cheekbones. I understand. Oh, man. Oh, if it weren't for the news, there'd be nothing going on in this world. Anyway, if we take a look at that, and if we also remember that Apple was one of the ones that looked the best, because Apple had completed a perfect ABCD correction, you know, at the 382 level. That was just one of 6 or 7 that was there that, you know, there was just so many of them. But now, boys and girls, what do we do next? We've been waiting for this rally, and we're getting it. And now what we have to do is to wait and see what's going to happen next. If you recall, the thing that we were looking for was greater volatility in the market. If you remember, I took us back to 2008. And we looked at the volatility that we had during 2008 over a similar time of similar cycles. And you'll notice here that the swings that we had during that time, if you look at the percent change there, you'll see we had a 3% swing, a 3% swing, a 5% swing, and a 7% swing. So in that 10-day period, we had wild swings, and that's what we are expecting. So far, what we've got is very, very small on a percentage basis. The move down was very small. And the move up was very small. It was very fast, but it was still very, very small. So that's it. Yes, David, IBM does have problems. I think what this is like 25 quarters in a row where it's had down revenue or something. Eventually, it's going to get to be like Sears, I guess. I don't know. Well, and I shouldn't say like Sears. Anyway, let's take a look at one of the markets that we were watching really closely yesterday, and that was the euro market. If you remember, we were watching the euro as it was making the 116.20 level. It hit it just spot on, and now we're down trading below 115.40. It looks like we're getting ready to make a little bit lower low. But the one that was the most, the easiest one, I believe, of the whole group, of course, was the British pound. And if we'll put this up here, we'll take a quick. Oh, we got a caller here from New Jersey. Victor, are you there?
Yes.
What can I do for you, my
I just have
friend?
one question for you. What do you think about DV, and then give me Intel, your rundown on Intel?
Deutsche Bank?
Yeah, it's at 11, and give me Intel after that. Where do you think that's going?
Intel? Okay, just give me a second here. I'll get Deutsche Bank up, and we'll be able to take a quick look at it, I believe.
I just got to go, though. I'm going to listen to you, okay?
Okay, no problem. I'll keep talking. Thanks for calling in. All right.
Okay, bye.
All right. Okay, we're going to take a look at Deutsche Bank here, folks. There's nothing in this chart that would tell us that we want to be buying Deutsche Bank. We're still trading at around 11. The old low we had down here was at 987, and we had a little bit of a bounce. The stock has, if this is the bounce, the old cat is out of the bag. That's what it looks like. So keep an eye on it. This thing looks like it wants to go a great deal lower. Then the next one that Victor asked us about is Intel. And we want to get it up and take a quick look at it. I've had a strong interest in this stock because I actually knew someone that was one of the founders of this company, and it's had better days, but it's still doing okay. And if we look at Intel here, it's been in a really big downtrend for quite some time. I don't see any reason to be a buyer of this. If you'll notice, let's get this up here, and we'll be able to see it a little bit clear here. The real time to look at Intel was way back in June. You can see the beautiful 3-drive to a top pattern we had. It was just absolutely perfect. A double ABCD. You were right at the 1.618 expansion. It was at 57. Now we're at 45. There should be some pretty good support at 45. Anything below 43, Victor, you don't want to have anything to do with that stock. That's the way it looks like from the cheap seats. So I would keep a very close eye on that one for sure. So we'll just watch it closely. But anyway, with Sandy Lerner. Anyway, let's take a quick look here at we got a break coming up, and when we get back, we want to look at these Treasury bonds because we've had several questions. They look really bearish, folks. We're having a little bit of a bounce today, but the overall interest rate market is so bearish that rates are going higher. I mean, Jamie Dimon was on today talking about 5%. That looks like it's in the cards. We're looking at the charts. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the long-term weekly chart of the Treasury bonds, and you can see here that we've been down 8 weeks. We're having a little bit of a bounce, and boy, this is certainly a definition of a dead cat bounce. I mean, since the 9th of October, we've gone, absolutely nowhere over the last, 6 or 7 trading days. If we take a look at this on a situation for the hourly chart, you'll notice that the even the 61% retracement on this just takes you up a point higher, which is at that 139 level. But this is not a very good situation for a bullish scenario. We're due for some type of a rally, of course, but if this is all we're getting, oh, for heaven's sakes, that's not a very good sign at all. It really isn't. It's just one of those things that really makes you wonder why why these things look so doggone bearish. But they do, and that's it. They've been looking bearish for a very long time. We see the same thing when we looked at the Treasury notes. Let's take a quick look at those, because those are also very bearish. But again, if we get down to that 5% area, which we certainly could, you'll notice here in the Treasury notes, we'll be setting right at a 61% retracement of the move way back in 2007, and that's going to be a real interesting one, for sure, because you have an ABCD pattern there, and you have a 1.618 expansion, and you have the long-term 61% level. So that's down a couple of handles in the notes. That would certainly get you to right at almost the 5% level, and that seems to be the magical level that people are looking at. I've been asked to take a look at Bitcoin because it's getting more and more in the news. this Michael Novogratz, who seems to be the father of Bitcoin. Well, I know that's Satoshi Nakamura, whatever it is the I can't remember his name. Anyway, it's a Satoshi, but I don't remember what his. It's a pseudonym, of course. But you'll notice here, this since March, we've had 61% retracements in Bitcoin all along, starting at 10,000, and we had another one at 9,500. We had another one at 8,700, and we had another one at 7,400. These are all leading to a big ABCD structure going back to 2010 when it was trading at $100 a share, and that takes us into about about $3,800 to $4,000 a share. Now, this is not a tulip bulb chart, folks. I mean, people talk about it, but it frankly isn't, because the tulip bulbs and some of these others, I mean, they give it up all really quick. It doesn't take, from December to October, to drop as much as it did. Sure, it's dropped a lot, but on a percentage basis, we're still much higher than we were when it was at $100 a share. So that's not like the tulip bulb mania or some of the others that we've seen. If you remember, I did talk about these bubbles here about a week or so ago. I'll bring it up again so you can take a look at it, and you can see, where we are here. Bitcoin is actually number 3, and it has not given up that much. Actually, it really hasn't on a percentage basis. And but there's been some others here. The fact that Qualcomm got that high was, really surprising. But that's neither here nor there. Another one that's really funny are the Beanie Babies. Oh my gosh, I can remember that back in 1995 and 96 in California. Oh boy, what my daughters were involved in that stuff. They actually did pretty good. They bought them and sold them and did okay. And then of course the fad died, and now you can pick them up for about $1 a piece or so. And some of those things were going for $200 and $300, maybe even more, as I recall. But boy, it was certainly a fad, and boy, they kept coming out with them. Anyway, let's book. David, what are the Beanie Babies selling for now? I don't even know. David White's here in the room chatting with us here, and he keeps up on all that stuff, so he could probably tell us. $5. Boy, oh boy. Oh boy, that's a good one. I can't even remember. I had a couple. What I did was we used to buy the Beanie Babies at the trading house in Pismo Beach, and we would take them to the hospital to give it to the kids. And they were always, oh my gosh, they went nuts to see those things. But that's neither here nor there. But it's a long time ago. Yep, Pinellas County in Florida. That's where it was founded. Thank you very much, Al. Al is right on top of it too. We got a lot of good information coming in here, so we want to keep the situation moving here and look at some of these other things that we want to cover, folks. One of the things that I've been waiting for, and I don't know if it's going to happen or not, and this is a more or less a pig in a poke. But as I talked to you about this about 2 weeks ago. When the market, well, 3 weeks ago, when the market was making that top, that there was a possibility that something like this might happen. This is from my page 134 out of my book, Astro Cycles: A Trader's Viewpoint. This was what I was on TFNN way back in 1987, and the top was in, and I was, Arch Crawford had called for that top. And he had been on the show, and I had been on the show several times, and the book was getting popular, and it was really fun. But anyway, what happened was we had that equinox come in on September the 22nd, and then the market rallied up into October the 2nd, and that was a really big Venus-Uranus aspect that happened on, I believe, a Tuesday, and then the market broke down and came into a low on the 16th of October, which was the Friday, and I had puts, and the market was down 106 Dow points that day, and it was really a great day to take your puts off and everything, and you filled you right on the high of the day for your puts, and I had a couple of them on, and so it was really a fun thing to do. Tomorrow is the anniversary of something very, very special to me, and I'm going to go over it with you tomorrow. That was the day before the crash. We took the kids to a big wedding in Beverly Hills down at the Bel Air Country Club, and I'll go through all that tomorrow. But anyway, what we were looking for was a rally into October and then a move down. I was on TFNN, the Financial News Network, with Sue Herrera and Bill Griffith out of Los Angeles, and I told Bill that the Dow would be down more than 300 points someday in mid-October. And we were down 106 points on that Friday. And the previous rally that we had in the market, in the stock market during that run, was 198 points. And all I did was I multiplied 198 times 100, 1.618, and it came out with 300 and some points. Well, we opened down 200, I believe. Yeah, we opened down about 200 points in the Dow on on Monday, October the 19th, and of course we were down 500 and some points, which was down 16% in one day. If you want to do the math, just figure where we are now at 26,000 times 16%, bada bing, bada boom. You're looking at some pretty serious numbers. 4,500 points in the Dow. I don't think that would be good for election day, but we'll have to wait and see. The problem is that everything that's in the news now is, folks, I really truly believe if it weren't for Donald Trump, they'd probably turn the TVs off because there's nothing else to talk about. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart from 1987 to show you the scenario that I'm looking at. And believe me, this is, like I mentioned, it's a pig in a poke. I don't know what's going to happen. I really don't. I'm just, it's 31 years ago that occurred. So I don't know if it's going to happen again. It's got the same scenario possible, but whether it's going to happen or not, I don't know. Where I think we are is, if you'll see that green arrow, is in the midst of the 2 to 5 day rally. And we'll see if it's going to be happening. We're in the fourth day of that right now. So assuming that our bottom was on Thursday, we made a double bottom on Friday. So somewhere between in this area, we'd have a pretty strong cycle date coming in here on Thursday and Friday. That's tomorrow, and especially Friday. Friday's going to be a real interesting one. The way that I'm well, that doesn't make any difference what I'm going to do. I'm just saying this is what we're looking at. No matter what happens, we're going to have some great volatility. I don't think there's any question about that. That's the real beautiful thing that you see when you see these 50-point moves in the S&P, 220-point move in the NASDAQ, And believe me, the move in the that we've seen so far, you see that 800-point down move that we've had in the Dow Jones Industrial Average. If you multiply that 800 times 1.618, you're coming out to 1,300. If you remember, it was about January or something, I believe it was, when we had the move down, was about 1,100 points in one day. So you will look for something around 1,300 points in one day. Anything below that would be an outlier event, which we'll probably see it. If you remember, on election night, the Dow was down 800 points in the overnight market, and then Florida came in on the side of the Republicans, and that kicked it up a little bit. And then as the news was coming into North Carolina, and the reason why I know all this is the little princess had a scorecard. She had all the electoral votes in all the different states, and she was calculating them to see, where we were. It was really great to see a social studies in action, because it was, I couldn't remember all these things about the electoral votes and stuff like that, but it was, very, very interesting, and I imagine it'll continue to be interesting, as it always is. We've had a question to in the room this morning to take a quick look at the dollar index, and we still believe that the dollar index looks very, very bullish. We've been excuse me one second, folks. We got this up to this 95.90 level. We backed off just a little bit over the last 5 or 6 days. That's when that euro hit the 116.20, and the euro has since, headed down. So we'll see whether that's going to mean very much or not. I'm not sure, but no one else is either. So you want to pay pretty close attention to what you think and not what anybody else does. It's not what you think, it's how you think. It's really important that you get your mental part of your game going, because the most important cycle of all is that 9-inch cycle from your left ear to your right ear. You get that right, all the rest of them are just fine. Let's take a quick look here at Apple on the opening price that we talked about several times in the last couple of weeks. If you'll notice here, we have about 10 examples here. This has worked about 7 out of 10 times. Some of them have been monster wins. The losses have all been 1.5 to 2 points as a max, and the wins have been anywhere from 4 to 8 points. And over this period since September the 26th, it's been a pretty good way of trading, just looking at that opening price. And we look at that opening 15 minutes, and then you want to use, because it's a $200 stock, you use about a 1% risk, which is around $2. And you just buy it. If it's up if it's above the opening, you buy it. If it's below the opening, you sell it. Can't be any more than that, and then just put your stop in and see what happens. The odds of winning on that are 65%. Show me some place in Las Vegas where you can get a 65% probability of winning. That's impossible. Every time you go into a casino, you're at a disadvantage. The only game that is, that you only have a chance in a casino is poker, because that's a game of skill. You really determine when you want to play, how much you want to bet. No other place in that casino do you get to do that. So that's an important thing to remember. Now, the people that are good with sports betting, and believe me, I have several of my students are professional sports bettors that live in Las Vegas, and they actually make their living by betting on football and basketball and baseball. But they do it statistically. I mean, it's just truly amazing. Two of my students from Las Vegas do exactly the same thing. They are horse players, and what they do is when you go to the racetrack to bet, folks, it's a 16 2/3 bet against you whenever you make a bet. In other words, the track and the state is taking 16.2%, 16 2/3% of any bet that you make. So what you have to do is you have to realize you want to put the odds in your favor. And what happens is it's usually a 9 or 10 race card. In other words, there's 10 races, and the public is there, and most of them are just there for fun and entertainment. There are a few professionals, but after the first 6 races, the public will be losing. And so what they have a tendency to do is they bet on the long shots to try to get even. When they bet on the long shots, it makes the favorites an overlay. In other words, a favorite is, say, 2-1, and all of a sudden he gets bet to 3-1. And if you bet that favorite to show, and he's in the show money 85% of the time, and his payoff on the show bet is much greater than it was during the first 6 races, that's a big edge. I watched them do this day after day over the years, folks, and believe me, and what they do is they bet $500 or $1,000 to show on that horse, and instead of paying $220, in other words 10%, it might pay $320, and that's a huge advantage. But that's what they did, and there's a lot of different ways to skin cats, and oops, not good to say that. Probably going to be on the cat Me Too movement, so I better be careful. Anyway, that's a good way to approach betting. It's statistics. That's all it is. You're putting the odds in your favor, much like that apple. Just putting the odds in your favor by 65%. That if it's above the opening price, you buy it. If it's below the opening price, you sell it. That's pretty much it. Okay, now we had that move yesterday that we had. Was some type of an outlier event, a very small one. Even though it was wild, it was all, one-way Corrigan all the way up. And whether it's going to continue that way or not, we really don't know. But what we have to see now is if we're going to continue to the upside. If this is all we get, folks, if the high was yesterday, that's the 3-day rally, and that's not going to be good. So watch the action from where we are now, because if you remember yesterday, we were talking about the the beeper's going off, so let me check and see what we got going here, and it happens to be in this crude oil. This crude oil is another one that really looks bad, boys and girls. I'll tell you, we've had really good news in crude oil, and this market can't get out of its way. I mean, it really doesn't look very good at all. That's neither here nor there. That means we're probably going to get a bounce just for just because it's testing these really critical levels. But with all the news being, really bullish to crude oil, and we've been saying that here for several days. In fact, that was one of the things that we covered in the newsletter last week, the fact that the crude oil was, really, really bearish. And if you'll notice here, we had a recommendation to sell it at 72.40, and you'll never guess what the high was. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at tfnn.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I posted a chart of the heating oil, what we were expecting this past week, and of course we get a nice little rally, and then it turned down in the heating oil, much like what crude oil has done. Now, we're really at some pretty severe support here in crude oil at $70 a barrel. Watch it very, very closely, because if you get below it just a little bit and it doesn't, totally collapse, it's got a chance for a little bit more of a rally, but that support is very, very strong at that $70 a barrel level. Whether this has anything to do with the fundamentals of what's going on, you have to worry about that if you're a fundamentalist, but if you're a technician, it really doesn't figure into your thinking. Look how bullish it's been for crude oil. With the possibility, I have heard $100 and $130 a barrel oil all week long on Bloomberg, coming out of Saudi Arabia and Iran and Russia. And it's just really amazing to the fact that you get really bullish news and the market doesn't rally. That's one of the things that I've learned through the years, that if the market is really bullish and prices don't go up, the only place it can go is down. Perfect example, look at sugar and sugar and coffee over the last 3 weeks. Terribly bearish news. Just too much sugar and too much coffee, and look at it. Coffee rallies 23 cents a pound, and sugars rallies 2.5 cents a pound, those are huge moves for those markets. So we'll watch that. We've had a question about the grains. We've been very bullish on the grains for quite some time. I sent out a special report just about a month ago when we were making that 3 drive to a bottom pattern in the corn and the beans, and they've had pretty nice rallies, and we're in the midst of the harvest now, so we're waiting to see what happens with demand, and that'll be reflected in the charts. The beans have moved up quite nicely considering that we have Chinese tariffs. The one thing we do know that there's 1.6 billion people in China, and they are not going to stop cooking with oil and stop eating soybean meal, folks. I can promise you that. They're going to have to get it from somewhere. Now, we have a question about the British pound that we posted it earlier. One of our friends from across the pond was kind enough to send it to this really nice Okay, yeah. Well, there's all kinds of bearish reports about the glut in soybeans. We've heard that before. Mike, since since Mike from Canada is calling in, I hope that's Mike from Canada. Anyway, he's talking about the bearish news on soybeans. Folks, one of the most bullish moves. I used to do a trade of the year for many years. And I didn't have any losers, but they had, oh, Safety Harbor, Florida. I'm sorry, Mike. The other Mike is from Toronto. But Barton Biggs, who used to come on, he was with Morgan Stanley, and he came on once and said the only usage that they could find for soybean meal would be for the sawdust replacement on the country and western country and western bars. And he said that would be the only use that they have for soybean meal because it looks like sawdust. Anyway, it rallied. Oh my God! I think $300 a ton, which was like $30,000 over the next 8 or 9 months. So we'll see that. No, Mike is from Toronto, and that it's the same handle, Mike K, but different way they do it. Wheat. Mike's asking a question about the wheat. The wheat still looks good to me. I'm still waiting for a price of 504. We're trading around 518 right now. I'm a little slow, Peak. Thank you very much. Anyway, let's take a look at this British pound because this is a really interesting scenario. This is a foreign currency trader using pattern recognition, and you'll notice the big ABCD up at the top there at that 132.40 level, and we hit that low today, right on the money at 132.20. We're trading around 131.22 or something like that right now. But what he was referring to is that when we had that, and this is a 15-minute chart, he had that really nice symmetrical 135 pattern with lower tops. And when he had that wide-ranging bar right after 0.5 is when he entered, and that was a really quick move down over 2 hours, and the risk was very small, and that's what he does. He's a merchant for the British pound, and that's pretty much what it's doing. So anyway, that's one way of looking at some of these things, and there's a lot of other ways you can do the S&P or the NASDAQ. They all have some of the similarities that we have as we look at some of these things. Give me one other thing here. I'm going to have an interesting show tomorrow. So, we're going to go down history lane tomorrow because that got a lot of stuff to do. Let's take a quick look here at this gold market. We're trading around 1230 this morning. We haven't been able to get above the 1236. If we do, we're going to be looking at some pretty good moves, maybe to 1242 to all the way up to 1260. And whether this is going to happen, we'll have to wait and see. On the downside, there should be really strong support at $1,200 in the gold. That is something that is really, really important. So let's keep an eye on that. That's a very, very important one. Okay, do we have a caller? I guess we don't. We're not going to worry about that. Just move on here to the next question that someone had, and that was about the banking index. This is another one that's acting very poorly, folks. I mentioned one of the reasons why that market looked so bearish was the banking index, and as you can see, we made that perfect 61% retracement off the September low. A lot of patterns coming together. You can see the cluster of the 1.27, the ABCD, the 618, target complete, and all we've been able to do now is rally up to about the 103 level. Now, we've got to get moving here with this, or we're going to be looking at something a whole lot worse to the downside, and that's what I think is coming, but, like I say, that's my assumption, and we know how to spell assumption, A-S-S-U-M-E, so we want to be careful of that one. Anyway, let's move on to one other question that someone had, and that was about the Dow Jones Industrial Average. We'll get it up, and we'll see here in the Dow Jones Industrial Average that we were able to make a beautiful 61% retracement of the low in July. It was also a 50% retracement from the low in March. We had two numbers coming together. It also went below the 200-day moving average by 1 day, and now we've rallied back to get up to that 26,000 level. So that's some of the things that we want to keep an eye on this as we're watching these things unfold today. I think we're having a little bit of just an up and down move so far, and the market really hasn't transformed very much. But watch the crude oil, folks, at that $70 a barrel level. That's going to be a really key level to pay attention to, because if it can hold that level, it still has a chance, for a little bit of a rally. But it's really key level, to pay very, very close attention to from what we're looking at. So we've got to take a break here pretty soon, and then we will get back here. I wanted to take one more look at these grain markets, because I think we've got a chance here. We're going to look at the wheat a little bit closer for our good friend Mike, so he can get an idea of what we're looking at here in wheat, and we want to cover that when we get back from the break. I'll pull that up, and you'll be able to see it without too much trouble. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, now what we're going to look at now is the Christmas wheat, and as you can see here, what I'm looking for is a potential move down around the 504 a bushel level. That's down 15 cents or 14 cents from where we are right now. Whether we get there or not, I'm not sure, but if we do, it's going to come into some really nice strong patterns, so we'll keep an eye out what's going on. Anyway, let's keep an eye on it. It's very, very important for the grains. But if we take a look at the next one, which is the Christmas corn, you can see that after we made that 3 drive to a bottom pattern back on September the 17th, we've basically been going higher and higher. We came very, very close to the 78% level this week, folks. We got up to 376. We're trading around 375 and change right now. That's going to be a very interesting spot because you have a beautiful ABCD pattern there. You have a 78% retracement of the high that we made, back in August. And you also have a 50% retracement from the high that we made back on Memorial Day before the market broke down due to the weather and then also to the supposedly tariffs. I think most of it was due to weather, but the tariffs certainly didn't help it. But like I mentioned, they are not going to stop eating anywhere in the world. They might have to pay up for it from a different country, but they will get it. There's only certain places you can get large quantities of soybeans. It's either South America or the United States. So it's got to buy it somewhere. Anyway, the IWM looks extremely bearish. It's had a really perfect retracement right at the exact 61% retracement. We rallied up not even to anywhere near a 382 retracement. So this is what you're watching. You got to be watching that 3-day action. That's the thing that's important. What I'd really like to do is if the market could stay in this area with maybe a little bit higher high today and tomorrow, and then come in Friday, that would be an ideal scenario. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!